Today we are going to do the fixed asset note. You are provided with information from the records of good place traders. Okay, then you are told to calculate the depreciation on equipment for the year ended 31 December 2021 and also for the vehicles. Okay, and then you are told to do the fixed asset note. Okay, let's calculate the depreciation on equipment. Information. The information provided below is an extract of a pre-adjustment trial balance of good place traders. List of balances on 31 December 2021. So we are given, and then equipment. New equipment with a cost price of 120,000 was purchased on 1 October 2021. So this equipment was purchased on 1 October 2021. And then no entries have been made, meaning that this equipment is not included in this money because no entries were made. Okay, so let's go and do the calculations. We are told to calculate the depreciation on the old equipment. So the old equipment obviously is this one because the new one is 120,000. So the old one is 810,000 times. So then you are told that equipment is depreciated at 20% using the cost price method. So when you're calculating the depreciation using a cost price method, we don't subtract the accumulated depreciation. So we just use a percentage times 20% is equal to 162,000. So we're supposed to write that one here. So it's 162,000. Then the new vehicle, the new equipment. New equipment with the cost price of 120,000 was purchased. So the cost price is 120,000 times the 20% times. So this vehicle was purchased on 1 October 2021. So meaning that this vehicle stayed for 3 months in this year because our year ends on 31 December 2021. So it stayed October, November, December. It stayed for 3 months. So times 3/12 is equal to 6,000. So the total depreciation for the equipment, it is 168,000 if you add the two. Depreciation on the vehicles. Depreciation on the vehicle sold. What are they saying about the vehicle sold? One of the vehicle was sold for 190,000 on 1 July 2021. The vehicle was purchased on 1 July 2019 for 320. So this is a cost price of this vehicle because we purchased it on 1 July 2019 for 320. So meaning that this is its cost price. The accumulated depreciation for the vehicle on 1 January 2021 was 46,400. So at the beginning of the year, the accumulated depreciation, it was 46,400. Vehicles are depreciated at 10% per annum using the diminishing balance method. Meaning that if we are calculating the depreciation, we must subtract the accumulated depreciation. So minus 46,400, which is equal to 273,600 times, so the percentage is 10%, times 10%, times, so this vehicle stayed for how many months? This vehicle stayed for how many months? So this vehicle was sold on 1 July 2021. So in our current year, this vehicle stayed from 1 January 2021 to 30 June 2021. Then on 1 July, it was sold, meaning that this vehicle stayed for the whole 6 months. So we're calculating the depreciation of the 6 months, which is equal to 13,608. Depreciation on the remaining vehicles. Okay, the vehicles is 2,680,000. And then the accumulated depreciation 1,060,000. Now, if we are selling, uh, the asset, we must subtract its cost and also its accumulated depreciation. We subtract its cost and also the accumulated depreciation, meaning that from the cost of the assets, we take out the cost of the asset sold and also the accumulated depreciation of the asset sold. So what is the cost of the asset sold? The cost is 320,000. So minus 320,000. So I said we also subtract the accumulated. So the accumulated of the assets sold is 46,400. So minus 46,400. What is the answer? This one is 2,360,000. Then this one is 1,013,600. Now, because vehicles are depreciated at a 10% per annum using the diminishing balance method, meaning that if you are calculating the depreciation, we must subtract the accumulated depreciation. So we're going to say the cost of the remaining vehicle, because the remaining vehicle right now is this one. So minus the accumulated depreciation of the remaining vehicle is equal to 1,346,400 times, so the percentage is 10%, times 10%. So obviously this one is stayed for the whole year, the remaining one. So which is going to give you 134,640. Then now the total depreciation for the vehicle. So we're going to take this 13,680 plus 134,640, which is going to give you 148,320. Okay. So we are done with the calculations for the depreciation. We found out that for the vehicle, it's 148,320. And then for the equipment, it's 168,000. Total depreciation is 168,000. Okay. Now, so we are told that new vehicle, the cost price of 120 was purchased, so with an additional equipment. We are told that new equipment with the cost price of 120,000 was purchased on 1 October 2021, meaning that now we have an additional equipment of 120,000. So no equipment was sold. So we don't have the disposal. Now to get the movements, we say 120 minus 168, which is going to give you a negative 48,000. It is why we are writing it in brackets. Then to get the carrying value, you say 810,000 minus 240, which is 570,000. Now, to get the cost of the equipment, we're going to say the cost at the beginning plus the additions. So meaning that you're going to say 810,000 plus 120,000 is equal to 980,000. Now, to get the accumulated depreciation at the end, we are going to say to get the accumulated depreciation at the end, we're going to say accumulated depreciation at the beginning plus depreciation. So it's 240 plus 168,000, which is equal to 408,000. So to get the carrying value, you see 980 minus 408, which is going to give you 522,000. Now let's move to the vehicle. Let's move to the vehicle. One of the delivery vehicle was sold for 190. The vehicle was purchased on 1 July 2019 for 320. So it was purchased for 320. So a vehicle was sold. So what we are going to do is, because we must record it at the carrying value. So we need to subtract its accumulated depreciation. So the accumulated depreciation of this vehicle is 46,400. So minus 46,400. Now, um, we must subtract its accumulated depreciation and its depreciation of the current year. To get the disposal at carrying value, we must subtract the accumulated depreciation and also its depreciation of the current year. So what is the depreciation of the vehicle sold? What is the depreciation of the vehicle sold? The depreciation of the vehicle sold is 13,680. That's 13,680. So minus 13,680. So 320 minus 46,400 minus 13,680 is equal to 259,920. So we don't see the vehicle that was bought. Now what you're going to do, now to get the carrying value of the vehicle at the beginning, you say cost minus accumulated depreciation, which will give you 1,620,000. Now to get the movements, we're going to say, so we were going to say if there was an addition. So now because we don't have an addition, so meaning that the addition is 0 minus 259,920 minus 148,320 is equal to negative 408 to 40. 408 to 40. So because it's a negative number, we put it in brackets. Now, to get the cost at the end of the year, to get the cost at the end of the year, so what we're going to do is we're going to take the cost of the vehicle. So the cost of the vehicle is 2,680. 2,680. So we're going to take the cost of the vehicle and then we're going to subtract the cost of the vehicle sold. So the cost of the vehicle sold is 320. So 2,680 minus 320 is equal to 2,360,000. So this is the cost of the vehicle remaining. If you can remember, we did that calculation here. I think we did that calculation here. Yeah, it's here. Now, to get the accumulated depreciation at the end of the year. So what we're going to do is we're going to take the accumulated depreciation at the beginning plus depreciation minus accumulated depreciation of the asset sold So we're going to say accumulated depreciation at the beginning plus depreciation minus accumulated depreciation of the assets sold minus the current year depreciation of the asset sold. So we're going to say 1,060,000 minus, plus the depreciation, so which is 148,320 minus the accumulated depreciation of the assets sold, which is 46,400 minus the depreciation of the assets sold, which is 13,680, which is equal to, so 1,060,000 minus, plus 148,320 minus 46,400 minus 13,680 is equal to 1,148,240. So it's 1,148,240. Now to get the carrying value at the end of the year, say cost minus accumulated, which is going to give you the carrying value of 1,211,760.